Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Bullish bets. Bond traders ratchet up positioning ahead of today's Fed decision and hopes Chair Jay Powell signals a March cut is firmly on the table. DeepSeek probe. Microsoft and OpenAI investigate whether a group linked to the Chinese AI startup used its data without permission. And Russia struggles to retain 2 military bases in Syria, which have been key to its influence across the Middle East and Africa. Well, it's just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai. The major event this week, of course, DeepSeek and all the ramifications it's had on markets. Markets did stabilize by the end of the day yesterday, though. Wall Street posting gains by the end of the session. S&P up 0.9%. NASDAQ 100 ending the session up 1.6%. NVIDIA, of course, in the eye of the storm. On Tuesday, down 17%. Yesterday, Monday, down 17%. Yesterday, rallying 9% by the end of the day. So some stabilization coming through. But we're going to talk more about the broader ramifications of DeepSeek. But don't forget that today we also have tech earnings to watch out for. We've got the likes of Microsoft, Meta, and Tesla kicking off the big tech earnings today. So again, it's going to be key for market direction. In addition to the Fed meeting, and no one is expecting the Fed to go for a rate cut today, but possible signals about March are going to be watched for very closely. The market is penciling in about 30% probability of a cut as we head into March. Today, this is what the board is looking like. Futures not doing a whole lot, trading sideways for both the S&P and the NASDAQ. 10-year yield sitting at around 4.5, so that's been a good support level as of late. Interesting to see where we go from here, but obviously we have rallied quite a significant amount over the course of the last couple of days in response to the risk-off environment. And then Brent also pulling back. We were close to $80 last week, trading at around $77 now, down about 0.2% as the energy complex comes off a little bit on further talks about tariffs and the potential impact that could have on trade coming out of the Trump administration. So this is where we are today. As for our terminal chart today, I thought it was just interesting, given we have the Fed coming up today, the market has now moved in line with the dot projections. It doesn't happen that often, but the dots are projecting 2 rate cuts this year, and that's pretty much what the market is expecting now. So in line with what the Fed guided to back in December. So there you can see it. The white is the Fed median dot, and then the blue is what the markets are pricing in. They're sitting on top of one another. All right, so for more on how markets are moving this morning, we're joined by Mark Codmore, our Markets Live executive editor in Bangkok. Mark, major event of the week obviously has been DeepSeek. There are lots of other things that we can talk about. But from your standpoint, how much of a lasting impact do you think this is going to have on people's sentiment and how the world is feeling about U.S. AI dominance?
I think this is a massive story. I really think this is a bit of a game-changing moment. Of course, this has been building for a while. DeepSeek didn't suddenly get invented last week, and people who are close to the sector have been kind of studying it for a while. But it's suddenly, the last week's developments have changed 2 big things. One is that AI is now much lower cost than was previously perceived as possible. And therefore, it doesn't require just immense spending on data centers quite to the extent that it previously believed. There's innovation on the software side that makes this more accessible for other people. The other fact is that this new model, this inference model, is in fact open source. And that makes it available to many more people. And of course, maybe perhaps the third point, I know this said earlier too, is that this has been done in China that was expected to be struggling and behind in the AI race due to the attempts by the US to curb its access to chips. And it shows that kind of innovation and software means you can get around these problems. All those things together mean a massive productivity boom for the world on a longer-term basis. It means TINA, the idea that there is no alternative to US mega-cap tech, is now dead. So in terms of longer-term sentiment, I do think that the exorbitant premium we've had on US mega-cap tech will now subside to some extent, yet while being bullish globally for stocks. So on a relative performance basis, I think US exceptionalism is kind of over as a theme, even though it's quite bullish. In the very short term, though, it is all about earnings ahead, as you flagged, and that means I have no particular view in the next 4 days of trading, but I think this is more a multi-month theme.
Yeah, and we've been talking for a while now about the massive premium that U.S. equity markets enjoy versus their Chinese counterparts. Do you think that this could change things? Could this be the catalyst for international community to start thinking about buying into the Chinese equity story once again?
At the risk of looking quite foolish, I very strongly believe that's the case. US outperformance has been a theme for the past 15 years. So, of course, trying to stand in the way of a trend that's run for a long time risks, looking quite idiotic or foolish after a period of time. But I think that this is, given how stretched valuations have got, so you've both got on the US side really, really stretched premium. These are very good companies. These companies aren't going away. These are companies that make a lot of money, but you're paying a very, very high price for them, because there was the idea that there was no viable alternative. Tina, there's no alternative. But suddenly, you've got an alternative around the rest of the world. And on the flip side of that kind of trade that you mentioned, Chinese and Hong Kong stocks, particularly Hong Kong stocks, actually more than China, are extremely discounted on the idea that of this global trade war that was particularly going to target its kind of AI development. So suddenly, the discount there should be removed as the premium in the US should be removed. So yes, I think you'll see a narrowing of that valuation difference. It's not going to converge ever anytime soon, but a narrowing to some extent. And I think that's why. And I think it'll also play into other parts of the world, but particularly concentrated around Hong Kong, China, and those Hong Kong, China derivatives.
Yeah, it's amazing. We were talking about what could shake these markets up towards the end of last year, and here it is, staring at us in the face. In the third week of January, the Grey Swan event of 2025. Mark Cudmore, thank you so much for your perspectives. Our Markets Live executive editor in Bangkok. Well, Mark was just talking about some of the few people in the space that actually did know a lot about what was going on with DeepSeek. Very happy to bring in Robert Lee in a moment. But first, let me just bring you the story. Microsoft and OpenAI are looking into whether a group linked to Chinese AI startup DeepSeek obtained its data without authorization. The group allegedly transferred a large amount of data using OpenAI's application programming interface. So for more, we are joined by the expert, Robert Lee, senior analyst at Bloomberg Intelligence, who's been writing about DeepSeek long before we started talking about it on the show. Good to have you on, Robert. Let me just start off with this story here. Many people are pointing to the fact that DeepSeek's model is an open source model. And now we've got this could be quite monumental accusation coming through from Microsoft saying that they're probing the data obtained by DeepSeek to see whether any of it was obtained without authorization. What do we know about this story and, of course, the geopolitical ramifications of that?
Sure. OK, great question. So obviously, over the last week or so, DeepSeek's come to prominence globally. It's not just shaken up financial markets, but also a wake-up call for the US tech sector. Although, as I've said in our previous chats, I think the likes of Microsoft, etc., have been well aware of this company for some time. It's not really been totally under the radar. But what really surprised people over the last couple of weeks was a paper that DeepSeek published on its website claiming that the training costs on their latest iteration of model cost less than $6 million. So depending on who you want to compare with, that's between 50 and even 100 times cheaper than any of the major US tech platforms. Now, I would say, based on what we know about their architecture and their approach, and we can see the results of their models, then this is all based in some sort of truth and reality. However, $6 million is so far below the cost of anybody else, it just doesn't seem credible. Now, we've got no hard evidence or data to back that up at the moment, but just, based on gut feel and intuition. So I think that is one thing that has caused a little bit of rumouring and discussion, obviously, within the industry, and has prompted the likes of Microsoft and OpenAI to look into this. So if I just continue for a second, what they're looking into is whether DeepSeek has been using the outputs from OpenAI's model to essentially cut corners and help accelerate the training of the DeepSeek model. So obviously that would be against their regulations, against their licensing. So, as we see what we get, is this the truth? Is DeepSeek really that competitive, or has it had a little bit of help and cut corners here or there? So that's what the focus of the debate seems to be moving on to now.
I'm curious in your world whether there's been any discussion about the relative advantage of the closed source model versus the open source model. OpenAI, Google's Gemini model, both closed sources. And in this case, the one that has taken the world by storm, R1, over the last couple of days was using an open source model. Is there an advantage to that? And is that possibly the reason why people are thinking that this model itself could actually be the one that takes on the scale that we thought the US counterparts were going to enjoy?
Okay, I mean, the rationale behind going open source, and DeepSeek is certainly not the only player going down that route. Even here in Asia, the likes of Alibaba is largely taking an open source approach. Essentially, you're allowing free access to the technology. You're allowing developers to use it, to integrate it into whatever they feel. But the issue is you're not really monetizing it in the short term. But the idea would be that over time you grow your market share, you grow in ultimate dominance, you squeeze out the competition, and then you can look to monetization at a later stage down the road. I think that's a sort of generic business plan that many of the internet platforms have followed over the last 20 years or so. So that's the rationale behind it. But the issue for the likes of DeepSeek is so many other companies are trying a similar strategy. And actually, the world or this sector is still awash with cash. So normally you would expect some sort of ultimate consolidation within the sector as the weaker hands, run out of cash because they're loss-making and fall by the wayside. But it's hard to see that in the China market at the moment, and even harder to see that in the US market. So I would argue, or have been arguing, that on the chatbot side, there is a high degree of commoditization. In other words, a low level of differentiation between these different products. There are many free-to-access products out there in the market, which makes it incredibly difficult for these companies to monetize. And at the same time, whilst a small section of consumers and companies obviously see genuine value and use in these, the majority do not. And therefore, monetization is really the key challenge that this industry faces, for the foreseeable future.
Yeah. Well, that ties in nicely to the fact that we've got mega tech earnings kicking off today. So a lot of scrutiny going to be on those earnings and also the outlook. Robert Lee, thank you so much, our senior analyst at Bloomberg Intelligence in Hong Kong, who's been writing about AI and the China advances in that space over the last 12 months. Now, Bloomberg has learned that Apple has been secretly working with SpaceX and T-Mobile US to add support for the Starlink network in its latest iPhone software. In an under-the-radar move, the smartphone's latest software update, released this week, now supports the technology. The initial version of Starlink is exclusively for texting, but SpaceX and T-Mobile have previously said they plan to expand into data connections and voice calls in the future. And over in the Middle East, Bloomberg has learned that Russia is struggling to retain 2 military bases in Syria that have enabled it to project influence in the Middle East and Africa. This comes as President Vladimir Putin's special representative for the Middle East arrived in Damascus. It's the first visit by a delegation from Moscow since the fall of the Assad regime in December. Now, let's bring in Bloomberg's managing editor for Middle East and North Africa, Honor Ant. Good to have you with us. Let's talk about the significance of Russia potentially withdrawing from these 2 bases in Syria, both the naval base and the air base.
Well, Jumana, as you said, if it were to happen, that would have significant impact on Russia's influence across the region, as well as far as in North Africa, as these 2 bases in Syria have been used to supply logistical support to Russian forces, both in the Middle East and beyond the region. What we have seen over the past few weeks, couple of months, is that Russian authorities were very confident that they would keep at least a level of access to both the main air base in central Syria and to the naval base in Tartus on the Mediterranean coast. That doesn't likely to be the case. That doesn't seem to be the case anymore. Not only they cannot take it for granted, but it looks very likely that Russia may lose access to these 2 bases. We have seen growing evidence that Russian officials are finding it difficult to make use of those bases, including lately the use of 2 Russian Navy ships that had to keep waiting in the Mediterranean Sea before they could dock at Tartus and move some military equipment within Syria. There is growing evidence that Russia is also getting worried, and therefore Vladimir Putin sent a special envoy to the Middle East to basically talk to HTS and see if Russia can maintain a level of access to these two important bases in Syria going forward. But as I said, that is looking like a really difficult pitch to make to Damascus.
Yeah, and you've got to wonder also about the back channel discussions that are taking place. Obviously, Syria are keen to reduce the level of sanctions on the country. So you've got to wonder if there's some diplomatic back channel discussion taking place about those bases. Onur Ant, thank you so much for joining us today. Bloomberg's managing editor for Middle East and North Africa. Well, still ahead, we'll get more on the market outlook with K2 Asset Management as traders count down to the Fed's rate decision and big tech earnings today. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, traders are awaiting the Fed's rate decision, where policymakers are widely expected to hold borrowing costs steady. Let's bring in George Boubouras, Managing Director for Research Investments and Advisory at K2 Asset Management. Well, I will ask you about the Fed, but I feel like the more exciting thing that happened this week was DeepSeek and how it shook up international markets, mostly the U.S. tech space. Do you expect the impact to be, for the impact of DeepSeek to be lasting on the rest of these markets?
Yeah, hello. Very quickly on that, and acknowledging we own NVIDIA in a long-short global portfolio, we think this is improbable that the degree of discount is what it's led to believe, but nevertheless, some form of discount to AI is very much on the cards, which is a very big positive for global growth, given that the unevenness of economic activity and earnings is always US-centric this year. So this lower price narrative, not quite as low as what DeepSeek is suggesting, but let's just say it's improbable but possible. It would lead to that bit of a catch-up and convergence of earnings and opportunity, because that lower price footprint, for obvious reasons, means aggregate earnings within that sector grow considerably around the world, and that is a general positive, that demand curve. But in the main, those that sold NVIDIA last Friday, obviously, were squeezed out with a short of the option, whatever margin call. They're obviously hurting, but we chose just to hold. It didn't seem to make much logic there, and those who bought obviously did okay with it. But just to reinforce, there's resilient US technology AI earnings regardless going forward, and a lower footprint and a lower price really helps the rest of the world do some catch up in both earnings and overall economic activity to the US, which is so dominant.
Yeah, are you worried that investors are going to start punishing these mega cap tech firms for their huge AI infrastructure spend?
They can, but the thing to reinforce, if you wanted to be shorting the mega tech names in the US, is that the resilience of earnings are coming through. EPS in the main have been very strong in double digit for 2024. It's estimated to be low double digit for 2025. Earnings are coming through, and there'll be hit or misses, but you can be shorting them, but you're going to have to fund that position for some time. Resilience of US technology earnings is the narrative, and the rest of the world can catch up, and at a faster pace if there was cheaper technology, as we're talking about with the DeepSeek narrative. But in the main, be very careful about that. US earnings double digit this year and single digits next year after double digits last year. It's a really good narrative. However, it is expensive.
Are you seeing any investment opportunities in other global markets right now? Very clear your narrative on the US global equities opportunities, but how are you thinking about other markets here?
Yeah, so very quickly, all parts of the capital structure of the US, so equities for like senior unsecured, investment grade, high yield, very much mortgage-backed securities in the US, notwithstanding this high yield since September. Taking a step back out, we'd like to go overweight again in Japan. There's a good narrative with the Nikkei, with technology, and they're in a good place there. Great value in the EU, but however, we say it's a bit of a value trap. It's an overgeneralization, and it'd be cheap 1 year forward. If you can find a narrative for mainland China to recover, and we don't believe it will, then you should be buying the higher correlated German and French markets. UK underweight, EU underweight in those markets there. High yield, though, however, within the European region, possible. Very quickly emerging markets, underweight, but like Southeast Asia. And when you go to mainland China, my final point here, the balance sheet recession at the household level and at the municipal level, it is such a dire strait and such a severe situation. It's really going to take another 5, 7+ years to get domestic demand going again and confidence in mainland China. But on the counter, the X-M, they've got one of the most efficient export sectors on the planet. It continues to do very well.
Yeah, very, very clear. George, a pleasure to talk to you about where you're seeing the investment opportunities. George Boubouras, Managing Director for Research Investments and Advisory at K2 Asset Management. Well, still ahead, regional banking results. ADIB full-year profit jumps. We discuss the numbers with the group CEO later this hour. This is Bloomberg. President Trump has invited Israeli Prime Minister Benjamin Netanyahu to a meeting at the White House next Tuesday. The early sit-down, confirmed by the Prime Minister's office, comes at a critical time, just weeks before the end of the first phase of the pause in fighting in Gaza. President Trump is offering buyouts to agency employees who don't want to comply with his demands they return to the office. The buyouts were offered in an email to federal employees that also warned the administration is seeking a, quote, more streamlined and flexible workforce. The National Treasury Employees Union says the email was designed to scare staff into quitting. And Canada's former trade minister, Chrystia Freeland, says her country can work with the Trump administration to reshape global trade and weaken China's dominance of supply chains. Freeland is vying to replace outgoing Prime Minister Justin Trudeau. She told Bloomberg the U.S. president's tariff threats against allies such as Canada and Mexico are actually aimed at China.
He has come to the conclusion that if he can show the rest of the world how mean and tough he can be with his closest partners and allies, how much he's prepared to beat up on those really nice Canadians who throughout history have been great partners for the U.S., how do you think that's going to make the Chinese feel?
And coming up, the World Bank unveils a plan to boost electricity access for 300 million people in sub-Saharan Africa. All the details next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Bullish bets. Bond traders ratchet up positioning ahead of today's Fed decision in hopes Chair Jay Powell signals a March cut is firmly on the table. DeepSeek probe. Microsoft and OpenAI investigate whether a group linked to the Chinese AI startup used its data without permission. And Russia struggles to retain 2 military bases in Syria, which have been key to its influence across the Middle East and Africa. It has just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, we ended the session yesterday with a bit of green on the boards. Somewhat of a rebound came through for S&P. The index closing the session up 0.9%. NASDAQ as well, ending the day yesterday up 1.6%. And even NVIDIA, which was in the eye of the storm, closing down 17%, almost $600 billion of market cap wiped out on Monday. Yesterday regained about 9%. So it rallied 8.9% by the end of the session. So brushing off some of the concerns from Monday, but of course we're not back to where we were on Friday. Today, futures leaning sideways, slightly towards the green. We have some big events coming up. Tech earnings season kicks off. We've got the likes of Microsoft, Meta, and Tesla reporting, and expectations is certainly high for those three big names, in addition to the Fed meeting later today. So it is going to be quite an eventful U.S. session later this afternoon. 10-year yield sitting at around 4.5%. About 30% probability of a rate cut is priced in for from March. So let's see how that moves when Powell speaks later today. And then Brent slipping a little bit. We are down 0.2%. And next chart I want to show you is actually in reference to some comments that Ray Dalio made, the investing titan. In some comments to the FT over the weekend, he said that irrational exuberance over artificial intelligence has fueled a bubble that resembles the build-up to the dot-com bust. Well, here we've traced the S&P multiple all the way back to 1999, early 2000, which of course was around the time of the 2000 dot-com bubble. And we're not quite yet at the extremes reached just before that bubble burst. So some historical context there. Right now, we're sitting at around 22 PE ratio for S&P 500. Back then, it got almost as high as around 25. So bear that in mind. All right, to Africa now. And World Bank President Ajay Banga saying boosting access to electricity is the key to unlocking the demographic dividend in the world's youngest continent. The World Bank and other partners plan to spend around $85 billion to bring power to 300 million people by 2030 through the Mission 300 program. For more, let's bring in our Chief Africa correspondent, Jennifer Zabazaja in Johannesburg. Jen, I know you and I have had many conversations about energy poverty in the continent. How far along does this go to help remedy some of the electricity and power issues that are facing Africa right now?
Right. And Jumana, good morning to you. I even remember having a similar conversation with Ajay Banga a few years ago at COP about this very same thing when it comes to the African continent. So it's something that he has talked about for quite a while. We knew about Mission 300 earlier in 2024 at the IMF World Bank spring meetings, but it's seeming like now it's really starting to pick up. So what we're hearing from Ajay Banga is that, yes, we do have some of these MDBs getting together and committing to this pledge to electrify the continent, essentially. It's building on the bank's bigger mission, which is investing billions of dollars in public financing to then mobilize trillions in private capital. And so he has told us that this is essentially a combination and a partnership between the World Bank, African Development Bank, Rockefeller Foundation, and others to help support a number of energy projects across sub-Saharan Africa. And in exchange for that, having a lot of these governments that are then hopefully going to have their populations electrified, creating more conducive business environments. And that looks very different depending on where you are. But as you were just mentioning there, Ajay Banga saying that this could really be the key to unlocking this demographic dividend. More than half of the population here in Africa does not have electricity. And we've seen a lot of issues in terms of financing when it comes to projects, whether that's on the grid or off the grid. And so potentially this is a pledge and this is a promise that can do that. And so in addition to the financing there, the pledges are asking countries to then commit to low-cost electricity, renewable sources, competitive tender processes, which is also very important, and universal access. And so, you know, he has this goal of 300 million by 2030 and hopes that we'll see more and more signatories. We got a few signatories this week, though, at the Energy Summit in Dar es Salaam.
Jen, so the U.S. is the World Bank's largest shareholder, as we know. We also know that President Trump has been withholding foreign aid, and that has huge global ramifications from Africa to Asia. Do we know what role the U.S. is going to play in this specific program, if at all?
Yeah, this is the big question, Jumana, as you said, because of just the significance of the U.S. To the World Bank. Listen, we did pose the question to Ajay Banga, and he said he has worked with Trump before and he is a practical man, but did say actually that it is important because we have seen Trump's approach to aid changing just over the past few days. So potentially we do see some changes in terms of these foreign aid programs. But he also did add that potentially this specific pledge, the Mission 300, gets to ultimately what the Trump administration is trying to do, which is cracking down on illegal migration. And he says it does reduce illegal migration because it incentivizes people to stay in their countries. But then also it focuses on all of these other marketplaces to then focus in on the products. And so, you know, right now Banga is saying he's hoping that no one makes any rash decisions yet with the Trump administration administration, but it's going to be one to pay close attention to, because in just a week we have seen a lot of these aid programs changing with the U.S. In relation to the continent. So it will be interesting to follow this through.
Yeah. Horizons Middle East and Africa anchor Jennifer Sabasaja, thank you so much. Now, top UN official says the city of Goma in the eastern region of the Democratic Republic of Congo is breaking under the strain of a Rwandan-backed rebel assault. Hundreds of thousands of people have fled the violence, with electricity failing across parts of the city, water supplies contaminated, and hospitals full. The assault on Goma, a key trading hub in a mineral-rich region, began on Monday, raising concerns about a wider conflict between Rwanda and the DRC. Ghana's new government looks set to revive a proposed anti-LGBTQ law, which lapsed when it took power this month. The legislation aims to criminalize LGBTQ people and their allies, but its endorsement could jeopardize international funding. Bloomberg's Ondira Ganga is in Kigali, Rwanda. This is really a controversial story, and I remember we covered it the first time around. The bill was supposed to have lapsed, but now they're thinking of bringing it back again. Why? Why does the government want to resuscitate this bill again?
Hi, Jumana. So it all boils down to religious reasons. The Speaker of the National Assembly, Alan Bagbin, says that LGBTQ is anti-God, and he faults the previous administration for failing to send this bill into law and says that is unconstitutional because Parliament has authority over lawmaking in Ghana. And to that regard, he says he'll be writing to the Attorney General and also to the Minister of Justice. And by the end of this year, this bill will be law. The bill was first floated and sponsored by Ningo Prime Member of Parliament, Sam George, who will now be serving as the Minister for Communication under the John Dramani Mahama administration, and it seeks to criminalize not only LGBTQ people but also perceived allyship. Unfortunately, the bill lapsed when John Mahama took power on the 7th of January, but then we're seeing the new president being a little bit lukewarm when it comes to the subject. He says that if the bill is to be reintroduced, it needs to be government-sponsored and it should be floated after extensive stakeholder engagement. But he adds a caveat to it and says that these values, family values, need to be inculcated into the curriculum so that children can grow up learning about it to negate the need to have to legislate it.
Yeah. What are the financial ramifications if the bill is passed once again? And we were talking about the reservations institutions like World Bank had around the bill passing the first time around. If it passes again, could this have an impact on Ghana's ability to keep funding itself?
Yes, yes, and yes. The Ministry of Finance did a very extensive press release and said that there will be dire consequences if this bill becomes law. First of all, it could jeopardize funding from the World Bank to a tune of $3.8 billion over a period of 6 years. Then there's $3 billion from the IMF, a program that Ghana onboarded after it defaulted on its debt. These two could be in jeopardy. And he says the impact will be felt in the country's foreign reserves, stability of their currency, which has had a yo-yo effect in the last couple of years. It will also be felt in the country's debt sustainability. This is a country that defaulted not less than 2 years ago. And then you also have Ghana's fiscal position, which is currently very weak. There's also been external pressure. Under Joe Biden, the State Department had threatened chilling effect on business and trade. And that's why we saw the previous administration drag its feet towards the bill. And now John Mahama is in a dilemma. Either he passes the bill and deals with international fallout, or drags his feet and deals with internal dissent.
Bloomberg's Ondira Ganga in Kigali, Rwanda. Thank you so much for bringing us the latest on the Ghana developments. Now, Nigeria is aiming to attract investors into its struggling power sector by offering higher tariffs while providing new electricity subsidies to help shield households from the extra cost. In a pitch to investors at a World Bank Energy Summit, the West African nation says it will give consumers a subsidized allowance of 50 kilowatt hours per month. Nigeria is seeking $15 billion from private investors to plug an estimated $23 billion hole the government believes is needed to revive the power sector. And Botswana's president says a diamond extraction and sales agreement has been reached with De Beers that will bring certainty to the gem-dependent economy. The Southern African nation is the world's biggest producer of rough diamonds by value, and the industry generates the bulk of its income. Castel Group has agreed to acquire Diageo's stake in its Ghana unit, expanding in the West African nation that's just recovering from a debt crisis. Billionaire Pierre Castel's purchase values the company at $104 million. Castel will enter into a new license and royalty agreement to allow the company to brew, produce, and distribute Guinness and the other Diageo brands produced in Ghana. And coming up, regional banking results. ADIB full-year profit jumps. We discuss the numbers with the group CEO next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Abu Dhabi Islamic Bank has reported a 16% jump in full-year profit compared to the year before. The lender posted net income of 5.78 billion dirhams. To discuss the numbers, we're joined by ADIB Group CEO Mohamed Abdelbary. It's really good to have you with us. Just picking up on those figures, net income jumped 16% year on year. The net profit before tax also up 26% year on year. Are you feeling pretty pleased with how 2024 went?
Yeah, first of all, thank you so much, Joanna, for having me today. I think it's been a very good outcome for us. We are delivering the growth underpinned by also strong asset growth and financing growth. So we're reporting almost 22% in financing growth. We have supported this growth also by record sales. I think we are now market leading in terms of sales originating in the retail business. Corporate Bank has done extremely well. So while the 26% year-on-year growth is strong, the underlying KPIs have been extremely strong as well.
Yeah. I want to ask you about impairments. I thought it was interesting that your impairments were actually down 18% year on year.
Yes.
What visibility do you have about impairments looking ahead to 2025 and your cost of risk?
Yeah, so the cost of risk for 2024 was aligned with prior years, around 50 basis points. Looking forward, I think the numbers will not change significantly despite the introduction of the new credit standards.
Exactly.
But because the health of the portfolio has been quite resilient, we believe that this level will probably continue in the future as well. Around 50 basis.
So this new UAE circular is unlikely then to affect ADIB Bank?
It has affected us a bit in the last quarter of 2024, but because the portfolio is resilient, so as our non-performing asset ratio is 4%, which is quite strong with 82% coverage, so it's probably going to be the same as well.
Yeah. I thought it's interesting that a couple of your competitors in the space, two UAE banks, have chosen to sell off their NPL portfolios. Do you have any plans to do the same? No
plans at this stage. We have a different strategy, so we have been able to really cure the legacy book quite effectively, and we continue on that path. So 4% NPA, can't complain, and we are continuing to driving this number downward as well.
What about by sector? Which are the fastest growing sectors by lending that you're seeing right now?
Definitely the retail space has been extremely performing very well, supported by our client base, but also the local economy has done very well. And within retail space, home finance. So the home finance market supported by the property market in the UAE was fantastic in 2024. So our origination efforts in 2024 have been up almost 20% in that space.
And when you talk about the real estate space, are contractors, developers, are they all paying on time? Or some trouble brewing in that space?
No, we have not seen any stress in this space. So the whole ecosystem is performing very well, whether it's contractors, end users, developers. And I think the market is supporting that, I would say, fundamental as well.
Yeah. What about the rates outlook? We have the Fed meeting coming up today. The markets have trimmed their expectations of how many rate cuts are going to happen this year, leaning to around 50 basis points. Do you see that as a positive for your book, for your net interest margins?
Definitely positive. So if you asked me this question 3 months ago, I would have said 4 cuts probably.
I know.
Right?
The market's
now we're talking about 2, maybe 1 even.
Yeah.
So definitely good for us. And I think it will also ease in the transition into a lower rate environment. So we are taking it slightly more easier, probably in the half 2 of next year.
How do you see the global growth environment impacting local activity? I mean, people are very concerned about the impact tariffs could have on global trade and the fact that U.S. seems to be leading the charge on growth. How do you see that having knock-on effects on the local economy?
So on the local economy, I think we have seen at times of stress that actually the local economy has done extremely well. So we are cautiously optimistic that the reflection will continue to be positive. 2025, we are looking forward for a good year as well. And I think the fundamentals are very strong as well.
And let me just ask you a final question about M&A? Do you have any appetite to engage in M&A activity at this point?
So the balance sheet is resilient. We have a strong capital base. We're always open for M&A, but it has to really make sense for us in terms of it has to be capital accretive and add value. So M&A for the sake of M&A would probably be a no, but it has to add really value to the franchise.
Yeah, okay, fair enough. That's a very couched answer, but I'll take it. Really good to have you on the show with us to talk through your earnings. That was Mohamed Abdelbary, the Group CEO of Abu Dhabi Investment Bank. Now, coming up, Boeing says it is optimistic of hitting a key production milestone this year after the plane maker posted the second worst annual loss in its history. We have all the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Saudi's state-run press agency says the nation's energy minister has met with counterparts from Iraq and Libya in Riyadh. The ministers discussed energy cooperation and the stability of global markets ahead of an OPEC Plus monitoring committee meeting next week. And the UAE is testing technologies aimed at boosting the rain generated by cloud seeding as the desert nation bids to improve water security. Like many countries in the Middle East, the UAE is heavily reliant on desalination to meet its growing water requirements. But the National Center of Meteorology says purifying seawater is 25 times more costly than cloud seeding. The nation's poor infrastructure for dealing with excessive rain was highlighted when floods paralyzed Dubai last year. Boeing shares closed off session highs after a worse-than-expected adjusted quarterly loss of $5.90 per share. The company burns through more than $14 billion of free cash during a calamitous 2024, marked by a mid-air door blowout and a lengthy strike. But CEO Kelly Ortberg says they're optimistic of hitting a closely watched production target by mid-year for the money-spinning 737 jetliner. Bloomberg's aviation reporter in Dubai, Lean Rashdan, joins us now. Lean, the number that jumped out to me when I saw the earnings yesterday, $11.8 billion loss for the year, just a gigantic sum. How are they going to turn things around?
Well, this was a pretty tough year for Boeing. This is their worst second annual loss, and they've had that blowout, they had a federal investigation, some turmoil, and a very lengthy workers' strike. So going forward, they're thinking about selling some assets. We might also be able to hit some targets for the 737, and that's a really important jet for them. That's their cornerstone, that's their moneymaker.
Yeah.
So the message yesterday is working and focusing on production, making sure suppliers can help Boeing reach its production targets. And hopefully, they're hoping by the end of the year they could reach 42 737s.
Yeah, and obviously delivery delays have been a major issue with some of their clients. But I thought it was interesting as well that the FAA has limited Boeing's output of the MAX to just 38 planes per month. So they're keeping a very close oversight of exactly how many planes they're producing, limiting the number of planes that they're producing. Why is that?
Well, we know in 2018 and 2019 we had those MAX crashes. Again, this year we had the blowout. So the FAA is shedding more scrutiny. We're in the middle of a federal investigation for Boeing. And Boeing is not even reaching that 38 limit.
Yeah.
They think we'll reach it by mid-year, and then they're hoping that all signs are leading towards maybe being able to push that FAA limit. Currently, there's a change in the FAA, there's the Trump administration, so there's a lot of things that are probably going to cause even more delays for Boeing, but the message is hopeful, the outlook is optimistic. So
yeah, the new CEO also talked about changes in the portfolio composition. Could we be looking at asset sales from Boeing as well?
Yes, he mentioned selling some assets. They want to, what he says, pruning, shedding some of the non-core business to really focus on the jet production. So one of them could be Jeppesen. That's their navigation. They make maps, flight plans. There's been interest. That's a profit-making unit for the company. They could get up to $8 billion. And GE, Honeywell, and some private equity firms are interested in that asset.
Yeah. Do you get the sense that investors are actually buying into this new management plan that is being put out? Obviously, it's coming off a very grueling couple of years for Boeing, massive cash loss, as we just spoke about. But is there a feeling that things are about to turn around for the company?
Yeah, I think investors reacted well yesterday to Ortberg's comments. This is the second time Boeing announces earnings ahead of time. So they pre-announced last week, and that was to get some of the bad news out so they could focus more on an optimistic outlook.
Yeah.
It seems that Ortberg is saying the right things. It seems that the factories are heading in the right direction. It's still a long way to go. There's still a lot of setbacks and a lot of unhappy customers with all the delays. So all these airlines are struggling because of Boeing.
Yeah.
If they can get that production up to where it should be, then these customers will have more faith in Boeing.
Yeah, and it really boils down to the delays, as we've spoken about many times over the course of the past year. Lean, great to have your perspectives on Boeing. It really has been front and center of the aviation sector in the last couple of years. Lean and Rashdan, our aviation reporter over here in the Middle East. All right, let us turn to markets for a check on how equity futures are shaping up. And despite everything that we've been talking about, there's so much going on in the markets with DeepSeek, with Fed, with tech earnings. Futures aren't really doing that much. So we've got S&P futures trading sideways. NASDAQ leaning towards the green after a better session yesterday. So a bit of a recovery coming through for tech stocks after the plunge that we had on Monday with NASDAQ down 3%. Yesterday it advanced 1.6%. The focus will be on those big names reporting today, Microsoft, Meta, and Tesla. So keep an eye out for that. And then, of course, we have the Fed meeting coming up as well. The focus there will be on the language that will come out of the Fed chair, Jerome Powell, and whether he indicates that March could be a live meeting. There's about 30% priced in. Here is the yield curve. You've got 10-year yield sitting at around 4.52%. But coming up in the next hour, we'll be discussing more about AI and the market reaction as investors look ahead to tech results and the Fed. Good morning. This is the second hour of Horizons Middle East and Africa. Our top stories this morning. Bullish bets. Bond traders ratchet up positioning ahead of today's Fed decision in hopes Chair Jay Powell signals a March cut is firmly on the table. DeepSeek probe. Microsoft and OpenAI investigate whether a group linked to the Chinese AI startup used its data without permission. And Russia struggles to retain 2 military bases in Syria, which have been key to its influence across the Middle East and Africa. Good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai.
And I'm Jennifer Zapasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. Of course, it is Fed Day, Jumana, and so a number of earnings that we're paying attention to, that the markets are paying very close attention to.
Yeah, and also we saw a bit of a rebound for Wall Street yesterday. It feels as though the fear factor, the big fear day was on Monday when we saw Nvidia drop 17%, the NASDAQ pull back 3%. But by yesterday, most of these Wall Street indices were trading back in the green again. So you've got to wonder about the sort of bigger existential questions that we've been talking about vis-a-vis DeepSeek. We'll talk more about that shortly with Robert Lee. But for now, a quick check on those markets because S&P futures not doing a whole lot. They're unchanged on the session. NASDAQ also leaning towards the green as well. We spoke about the recovery taking place. Jan mentioned the Fed meeting later today. There's about 30% probability of a rate cut priced in for March. So 10-year yield sitting at 4.52% right now. And then Brent, the energy complex, slipping a little bit. And here I've got to say, more concerns about the global growth outlook and the fact that the Trump administration continues to talk about tariffs, the possibility of universal tariffs of 2.5%, possibly even more if Trump gets his way. All of that not good for the global demand picture. So that's the screen right now. But I just want to show you as well our terminal charts, which also into the Fed, I think, is quite valid and worth pointing out. If you remember back in December, the Fed meeting, the dot projections showed that the median dot was expecting 2 rate cuts for 2025 throughout the course of this year. Well, look, markets are pretty much bang on pricing that as well. 48 basis points priced in now. So the white line is coinciding with the blue line. It doesn't happen that often because the markets tend to overshoot. But here we are. For once, markets are in line with those Fed median dot projections. Okay, let's continue the markets conversation as investors look ahead to big tech earnings and the Fed decision later today. Venram, our currency and rate strategist at Bloomberg MLive, joins us right now. Ven, so much to talk about, but maybe let's just start with the Fed and the fact that the bond markets seem to be sitting at around 4.5% now, 10-year yields. Also, rate expectations have once again increased. Investors are pricing in 2 rate cuts out of the Fed this year. What could change that narrative?
I think there are 2 things that could happen that could change the narrative, Jemana. At the moment, what the markets are thinking is more an indication. That's not a firm commitment that the Fed will go to it twice, because we have seen that bets waver in recent weeks. Now, if you look at the core PCE, it's been bobbing around 2.8%. Last year, that the Fed thought that it would go down to 2.5%, but we did not get a single print that was as low. So with 12-month PCE still averaging 2.8%, the Fed needs that core PCE to come down. And we get a reading of that core PCE later this week. Assuming it bobs around 280, where does that leave us? If you have a core PCE of 280, and if you assume that the neutral rate is 1%, as the Fed has assumed, so that leaves us with a policy rate of almost 4%. So the wiggle room for the Fed to cut twice in this year is not there at all at the moment. So one of 2 things needs to happen. One is either inflation comes down a whole lot, core PCE, or the economy takes a turn for the worse, which will make the Fed go accommodative. So unless those 2 things happen, we are not going to get those 2 rate cuts that the markets are thinking, with the first one likely in June.
Yeah. Then let me ask you, dollar is king, right? That was the message for most of 2024. But we've seen a bit of a pullback in the greenback in the first couple of weeks of January. Why is that the case, do you think?
I think that the dollar is kind of priced for perfection, Jemana, because if you look at what could send the dollar up, I mean, it's news of Trump tariffs, it's news of the Fed staying higher for longer. So pretty much all of that is priced into the market, into the dollar. And at current levels, you've got to ask what the risk reward on going long the dollar is. And the risk reward is asymmetric, because the reward is not very much, but the risk of holding on to dollar at such exalted levels, I mean, it's not going to tank a whole lot, but it's not going to go a whole lot higher as well. So I think that the risk reward is getting skewed with each move up in the dollar, which is why I'm not getting too excited about the dollar at this point.
Yeah. And it seems to be the case that many in the market are also sharing your view as well after the run-up we had in 2024. Venram, our currency and rate strategist at Bloomberg Live, thank you so much for bringing us the latest on how markets are reacting and anticipating the Fed. All right, we're also getting some regional bank news crossing as well, earnings coming through from Al Rajhi Bank. Just to let you know there that it's a big beat. The full-year profit came in at 19.72 billion riyals. The estimate was 18.66 billion riyals. So a big beat coming through from Al Rajhi Bank in terms of EPS, 4.67 riyals. The estimate was 4.58. Impairments, always interesting to watch, slightly lower than expectations there too, 2.12 billion riyals versus estimates of 2.13. And it's not just Al Rajhi. Also, Saudi National Bank reporting full-year profit of 21.19 billion, again, breaking through some of the estimates, so beating estimates, which were sitting at 20.119 billion riyal as well. Impairments also interesting to watch there. They've actually gone up 11% year on year, sitting at 1.02 billion riyals. So more banks' earnings coming through from the region this morning.
Yeah, that's right. Let's turn to some tech news. Microsoft and OpenAI are looking into whether a group linked to Chinese AI startup DeepSeek obtained its data without authorization. The group allegedly transferred a large amount of data using OpenAI's application programming interface. For more, we're joined by Robert Lee, senior analyst at Bloomberg Intelligence, who has been following this story. Robert, thanks for joining us. Maybe you can walk us through this described unauthorized way that DeepSeek potentially got involved here?
Okay, yeah, no, good question. I think what's triggered the scrutiny here is a paper that DeepSeek published on their website in the last couple of weeks, where they disclosed the training costs on their latest generation of model were less than $6 million. So relative to any of the big US tech platforms, that's between 50 and even 100 times cheaper. Now, based on our knowledge and understanding of the model and their relatively unique and innovative architecture, I think what they're doing and what they're achieving is based in some sort of reality and based in truth. However, as you mentioned in your intro, OpenAI does allow developers to integrate their model into their apps for a fee. So the question is, and this is where the real scrutiny is, if you like, DeepSeek doing this on the sly and basically cutting corners and that leading to some performance enhancement and also potential cost enhancement. So this is an allegation at the moment. There is no truth in this, and clearly it's something that Microsoft and OpenAI are investigating. But as you would have seen, I mean, President Trump has name-checked this company, and it's been looked into at the highest level. The US does not want any foreign country, let alone China, eating its lunch on AI.
Absolutely. And Robert, that leads me to an interesting note that you've recently put out about how DeepSeek could get caught up in a lot of the geopolitical tensions that we're seeing right now. How do you see this affecting their business in the US in particular?
Well, I think a worst-case scenario, and again, this is trying to project how in one direction of travel on this. I mean, their app could be banned in the same way that TikTok is threatened with a ban, although it looks like TikTok may find a way through if its US business is sold. And also, more recently, 2 weeks or so ago, we saw the Department of Defense in the States essentially blacklist Tencent. And Tencent, as most of your viewers should know, is China's biggest listed tech platform. So I think geopolitics is going to remain to the fore, and increasingly so, and be an overhang for the businesses of most Chinese tech platforms. Who else is the main competitor across a range of different sectors in the world, whether it is AI, semiconductors, you name it? Europe does have key strengths in certain niches, but it doesn't have the breadth and depth of technological industry that the likes of China does, I should say. So China is the real, competing across a range of different sectors, and now with a new, more forthright, more, on the front foot president, shall we say, I think geopolitics is going to be another key theme this year.
On the front foot president. Robert, that was a great way to describe him. Appreciate you joining us and giving us your research. Robert Lee, our senior analyst at Bloomberg Intelligence, joining us in Hong Kong. Thanks. Now, Bloomberg has learned that Apple has been secretly working with SpaceX and T-Mobile US to add support for the Starlink network in its latest iPhone software. In an under-the-radar move, the smartphone's latest software update, released this week, now supports the technology. The initial version of Starlink is exclusively for texting, but SpaceX and T-Mobile have previously said they plan to expand into data connections and voice calls in the future.
And Bloomberg has learned that Russia is struggling to retain 2 military bases in Syria that have enabled it to project influence in the Middle East and Africa. This comes as President Vladimir Putin's special representative for the Middle East arrived in Damascus. It is the first visit by a delegation from Moscow since the fall of the Assad regime in December. Let's now bring in Dana Khresh, Bloomberg's UAE bureau chief. Dana, what do we know about the fate of these two bases, the naval base and the air base sitting in Syria?
Good morning, Jomana. Yes, so negotiations over the fate of these two bases, the Russian bases in Syria, are stuck, and this is from our reporting there. So Tartus is the only Russian naval hub in the Mediterranean, and Hmeimim is like a key resupply base for Moscow's activities in many parts of Africa. And it seems Russia wants to maintain them in a certain capacity, and these negotiations with Syria are kind of stuck. Now, we saw Bogdanov, as you said, going to Syria with a delegation and discussing that with the caretaker or the interim government there. And we saw from Syrian television carrying his comments to say along the lines of, as we stand, there is no changes and they're still negotiating with the Syrian government. It would be a loss for Russia if they actually remove all of their equipment in the base from Syria. And it's a strategic setback as well. Syria remains locked in an escalating conflict, of course, with Ukraine, and of course, directly with the U.S. and its European allies. And Turkey, and who is playing a major role now in Syria and has that influence and the leverage, opposes the continuation and the presence of the Russian bases there. And that's creating the main obstacle. So I think it remains to be seen how Turkey and Russia come to an agreement over these bases that would also appease the interim government there.
Yeah, Donna, you mentioned Turkey and Russia, and I just wonder, the EU, the US, of course, the transitional government in Syria is very keen to remove the sanctions that are in place. What do we know about the back-channel diplomacy that's going on behind the scenes about, say, the potential withdrawal of the Russian presence in Syria in exchange, perhaps, for a lightening up of sanctions?
That wasn't linked directly, at least publicly, but it is a kind of a Turkey also has that influence there. And it's not primarily its main decision, but it remains to be seen, of course, how the Syrian government wants to maybe display or showcase their own alliance or getting closer to the EU there. So removing the Russian bases completely would certainly appease the EU and the US and would likely ease more sanctions. We saw the EU actually agreeing to ease some of these sanctions in the US as well. So this remains to be seen, but it is something that Syria is considering, and it would likely appease both the EU and the US and ease the sanctions there.
Well, something to watch. Dana Kharesh, Bloomberg's UAE bureau chief, thank you very much for the latest on Syria and Russia's presence on those bases within Syria. Now, still ahead, we're going to get the market outlook with Moody's analytics as traders count down to the Fed's rate decision and big tech earnings. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Traders are awaiting the Fed's rate decision, where policymakers are widely expected to hold borrowing costs steady. The hold could provide more time to lower inflation and to assess how President Donald Trump's policies will affect the economy. Joining us is Katrina Ell, Director and Head of Asia Pacific Economics at Moody's Analytics, joining us from Sydney. Katrina, great to get you on the show today. So you are of the camp that you expect the Fed to pause today. When it comes to the messaging, though, from Jerome Powell, are you expecting a dovish message? What's your expectation?
So I think that we'll continue to see the Fed treading incredibly carefully when it comes to any forward guidance that they're going to give, because at the end of the day, they are still wanting to bring inflation lower. It's still, hovering a little bit too high above that target range. We did see that, in the final months of the year, inflation was warmer than what they would have liked. And now going forward with President Trump back in the White House, and a lot of his policies, to be frank, are inflationary, but we don't know the extent to which they will be implemented, particularly thinking here about tariffs and immigration. So with the Fed squarely aware of this, that forward guidance, I think, will be quite scarce.
Well, Katrina, investors are waiting for that. So then what do you believe Jerome Powell then will choose to focus on if he is to be scarce in his messaging?
I think the focus will remain on the fact that they are continuing to ease, but at the end of the day, when we're looking at what the outlook is for interest rate cuts for this year, it will be fewer cuts than what was previously expected. And so I think if we're looking at what expectations are, if we do get some sort of agreement that we are looking at only about 50 basis points worth of reductions this year, then I don't think that markets will react too much to that. It's more at the end of the day, what the focus is on is just how aggressive Trump's going to be, and then what the flow-on implications to inflation are going to be at the end of the day.
So then, Katrina, if that's a non-event, so to speak, do you think earnings then will get more of a reaction from the markets, because we are expecting a lot of the Magnificent Seven to report?
Yeah, there's certainly the earnings data, and there's also the inflation and the wage data. So we'll get inflation, the PCE data for December later this week. We'll also get the quarterly wage prints as well. Now, we know that the Fed is being driven by data, and that inflation and labor market figures are critical inputs. And so it's like the Fed is doing this really difficult balancing act of wanting to bring down inflation a little bit more, but at the same time keeping a keen eye on what's happening with the labor market. So this week we will get both of those data points, which will continue to, we think, cement that expectation that we are looking at those fewer reductions this year. But at the same time, we are still on this easing bandwagon, which will continue to support our view that the US economy will continue to remain resilient this year. But of course, the labor market will continue to cool at a gradual pace. But at the same time, if we do see a bit of a pickup in that cooling, then we think that the Fed will be acutely aware of that and perhaps tread a little bit more aggressively when it comes to its easing cycle.
Katrina, how is the picture different in Europe? We'll get the ECB decision tomorrow. Where do you stand on what potentially we'll hear from Lagarde?
Yeah, I think it's a very different picture in Europe. What we're seeing is that we will get a rate cut in January, and then we are expecting another rate cut in March of 25 basis points, and then another 25 basis point reduction in June. What we're seeing in Europe is that the focus has really shifted away from inflation, because that is more within the comfort range now for the most part, and more onto, okay, how can we provide more support via monetary policy to actually lift domestic demand? So it actually is more appropriate to more aggressively ease back on those restrictive policy settings. And so I think that's the key thing that we're watching. And we did see President Lagarde actually come out and say, look, we're not so worried about this weak euro and the pass through to inflation. And it is kind of keeping that focus on the fact that inflation is broadly expected to cool a little bit further, but we do need to continue to prioritize supporting domestic demand. We need to keep helping manufacturers, broader businesses and households to really pick up, particularly against a backdrop where external conditions are expected to be more challenging this year.
All right, we'll wait to see how those two decisions pan out. Katrina Ell, Director and Head of Asia Pacific Economics at Moody's Analytics, joining us from Sydney. Thanks so much, Katrina. Always great to speak with you. Now, coming up, ASML earnings as investors grapple with the fallout from DeepSeek. Comments on AI demand and order numbers will be in focus. A preview coming up later this hour. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Canada's former Trade Minister, Chrystia Freeland, says her country can work with the Trump administration to reshape global trade and weaken China's dominance of supply chains. Freeland is vying to replace outgoing Prime Minister Justin Trudeau. She told Bloomberg the U.S. president's tariff threats against allies such as Canada and Mexico are actually aimed at China.
He has come to the conclusion that if he can show the rest of the world how mean and tough he can be with his closest partners and allies, how much he's prepared to beat up on those really nice Canadians who throughout history have been great partners for the US, how do you think that's going to make the Chinese feel?
President Trump is offering buyouts to agency employees who don't want to comply with his demands they return to the office. The buyouts were offered in an email to federal employees that also warned the administration is seeking a, quote, more streamlined and flexible workforce. The National Treasury Employees Union says the email was designed to scare staff into quitting. And Norway's wealth fund ended last year with a tech-heavy top 10. The world's single biggest owner of publicly traded stocks increased its holdings in Apple, Microsoft, Nvidia, and others from a year earlier. In total, technology stocks accounted for 9 out of its 10 largest holdings at the end of last year. Created in the 1990s to invest Norway's oil and gas revenues, the fund is now worth $1.8 trillion. So it tells you a lot about where they see the opportunities right now, mostly in tech space. 9 out of 10 of their positions are in those big tech names. And markets are leaning sideways, slightly towards the green as we head into tech earnings, the Fed, and of course, ongoing ramifications of DeepSeek. Next, we're going to be speaking to Ronit Ghose from Citi Global Insights about the outlook for AI. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. Bullish bets, bond traders ratchet up positioning ahead of today's Fed decision in hopes Chair Jay Powell signals a March cut is firmly on the table. DeepSeek probe. Microsoft and OpenAI investigate whether a group linked to the Chinese AI startup used its data without permission. And Russia struggles to retain 2 military bases in Syria, which have been key to its influence across the Middle East and Africa. It has just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to the second half of the second hour of Horizons Middle East and Africa. And Jen, I've got to say, I do like it when it's a busy markets day. It has been quite busy from a markets perspective the last couple of days with DeepSeek, earnings week kicking off, some of the big names to watch out for today, and of course the Fed. So there is quite a lot going on.
Absolutely, and assessing what is happening with tariffs when it is happening, a lot for markets. But right now, not doing too much, but I think sort of in the waiting line, waiting to see sort of what happens with the Fed when we do get the decision later today. If we take a look at U.S. equity futures stabilizing a bit to start Wednesday, but of course we did see a comeback coming on Tuesday, and really it was tech that was leading those gains. That, of course, coming after a bruising Monday session, as we know, because that was really triggered by DeepSeek. But we did see both the NASDAQ and the S&P closing Tuesday higher, and NVIDIA really making the biggest comeback on Tuesday, rallying 8.9% following the largest one-day value loss in history. That, of course, affecting the CEO on Monday as well. If we take a look at the 10-year yield, we're seeing yields coming inching lower right now, trading at 4.52%. Focus, of course, for investors is the Federal Reserve's rate decision. Many expecting a pause, but it's the telegraphing that we get from Fed Chair Powell that many are focused on. I've also, as I typically am, focused on what's happening with EM currencies, and in particular, as we continue to see Donald Trump's tariff threats and potentially the stronger dollar and how that is affecting EM currencies. We're seeing the gauge for EMs dropping now for a third day. We'll wait to see again how the Fed rate decision affects that. The Rwandan franc among one of the worst performers, at least here in Africa. And then oil trading in the red as well, down almost just over 0.2%. Brent trading just over $77 a barrel. And let's just finish on the Fed, because we mentioned it is decision day. Many people have been waiting for this, the first of 2025 for the Federal Reserve. We're seeing markets aligned with the Fed's end of year dot, widely expecting that hold to the decision today against a backdrop of healthy demand and stubborn inflation. Again, the question will be whether or not we do get some messaging about the forward guidance from Fed Chair Jerome Powell. And let's turn to some other news that we're following, but still in the U.S. A federal judge has temporarily blocked an order by the Trump administration freezing federal grants and loans due to concerns over its constitutionality. Bloomberg senior editor Derek Wallbank is joining us now and has been following the story. Derek, great to have you on. So talk to us about where things stand with Trump's plan. This has been changing by the day.
Well, where it stands right now is it's frozen. It's not going forward because a federal judge who was appointed by Joe Biden stopped the thing from going through. Now, this was the subject of no small amount of confusion, as you rightly say. It's a very broad sweeping order that came down trying to do sort of a blanket freeze on a lot of this federal funding that might possibly be implicated by Trump's prior executive orders. What that did in practice was it gummed up an awful lot of the works as people who are just sort of mid-level bureaucrats tried to figure out what the scope of that actually looks like. Now, the White House later came back and tried to dial that back a little bit and said, look, this is only going to be put forward to a narrow range of things. But, the interpretations for these are being done at every single step along the ladder. And you've already gotten this White House coming out and telling federal employees that they need to make sure that they don't stray too far from the president's explicit words. Right. And so there's been a lot of, OK, well, let's try and take a maximalist interpretation of this. All of that, as I say, gummed up the works in a whole lot of big ways across the United States. It was paused. This is going to be the subject of court decisions. It could be appealed up. And ultimately, you get to a point where you have a 6-3 Supreme Court appointed by Republicans, 3 of whom were appointed by Donald Trump in his first term. So I would expect that to happen. More broadly, I'd also say, though, this is going to be the way that a lot of things go with this president. He's going to put out maximalist executive orders and actions, and then they're going to be the subject of immediate court challenges. And so courts are going to play a very large role in figuring out what of Donald Trump's intentions actually becomes practice.
Yeah, they don't just happen overnight, them. Derek, can we just go over the border, though, and talk about Canada? One of our reporters, David Gura, spoke with Canadian Liberal leadership candidate Chrystia Freeland about Trump and some of the policies that he's proposed. Let's take a listen, and we'll talk to you after.
He has come to the conclusion that if he can show the rest of the world how mean and tough he can be with his closest partners and allies, how much he's prepared to beat up on those really nice Canadians who throughout history have been great partners for the U.S. How do you think that's going to make the Chinese feel?
And she is, of course, vying to replace Justin Trudeau as prime minister. What do you think those comments, though, Derek, say about the U.S. trade ties with Canada and also China and other trade partners?
Well, I think it's interesting, right? Chrystia Freeland is part of a contest going on right now in Canada trying to replace Justin Trudeau, where a large frame of the conversation is how do you respond to Donald Trump, right? And this has been a case not just for the Liberal politicians who are looking to take on that mantle right now, but also for other parties that are looking towards what may be an election, in the coming months. And I think that's going to be a big frame. I think it's not just Canada, though, right? It's Denmark, it's the European Union, it's Australia, it's other partners like that who are occasionally finding themselves in Trump's crosshairs. There's not really a big consensus on how to respond to that. Some of them, Trudeau was trying to go back and bat back hard. I think Freeland is trying to take a very tough posture here. But you see over in India, Narendra Modi has been playing up his personal ties to Donald Trump. Trump said that Modi is going to probably go to the White House in February. And so that's a place where you're maybe trying to get to warmth to forestall any potential tariff actions. Every single one of these leaders, though, is looking at that situation that just happened over the weekend with Colombia, right? U.S. trade partner, key partner in South America. There was a bit of a signal that they were going to cross Trump, and immediately there were signs that there were going to be tariffs, sanctions, all of this other stuff. And it took a lot of last-second negotiation to get that from actually going in place. So, yeah, there is a lot of consternation among allies. The last point I'd make, there is some consternation among those allies that Trump is going after them harder than he's been willing to go after China so far. Something to watch going forward.
Yeah, so far, very key there. Bloomberg senior editor Derek Wallbank. Derek, thanks so much for your reporting.
Thanks, Jen. All right, let's get back to this week's biggest market driver. It's not the Fed and it's not U.S. tech earnings. After Chinese AI app DeepSeek roiled markets and left investors questioning U.S. dominance, Bloomberg has learned that Microsoft is now looking into the possibility of the unauthorized transfer of OpenAI data. While this is being seen as a test for AI bulls, our next guest says 2025 is still the year for artificial intelligence. Ronit Ghose, Global Head of Future Finance at Citi Global Insights, joins us now. Great great to have you with us on the show. You've written a thematic piece of research saying that 2025 is going to be the year of agentic AI. I'm going to be honest.
Yeah.
I actually don't know the difference between generative AI and agentic AI. So maybe let's just use this opportunity as an opportunity for you to explain to us the difference and why you think this year agentic AI is going to be in the driving seat.
Sure. Well, thanks for having me. So generative AIs show it to me, and agentic AIs do it for me. So generative AI, you say, I want to go on holiday, show me the options. Agentic AI is, I want to go on holiday, show me the options, and maybe even book the options for me. It does it for you.
Where does ChatGPT fit into that picture?
So ChatGPT is generative AI.
Yeah.
So ChatGPT we've had for a couple of years now as consumers, we've had for longer as a technology. AI are machines that imitate how we think, and ChatGPT made it available for everyone. And we've got lots and lots of other models that have now appeared, including one in China.
Yeah, there was a view that U.S. were leading the race and that the best performing models were going to be emanating from the U.S. And of course, the arrival of DeepSeek has thrown all of that into jeopardy. How do you see DeepSeek and its ability to sort of upend people's, just expectations of the technology dominance out of the U.S.?
Absolutely. Many people in the last week, 10 days, have talked about this as America's Sputnik moment as it comes to AI. And in many ways, this model, the architecture of the model allows it to be trained and used more cheaply than current models. But what this does, and that was the thesis of our report, Joanna, which is it's just going to get easier and cheaper to use these models. It's great for us as users. So whether we're in finance or just consumers, the models are going to carry on getting cheaper to use until we use it more often. And DeepSeek is part of that trend.
Yeah, our Bloomberg intelligence analyst used the word commoditize. It's the beginning of the commoditization of some of these models. Do you think it's going to have adverse knock-on effects for the hyperscalers and the big tech names that have been spending billions and billions of dollars on AI infrastructure? There are going to be questions now about whether that's monetizable.
Oh, absolutely. So there's monetization in lots of different layers. There are the basic models, which are going to get cheaper and cheaper. Then there's application layers on top of it. What the advantage the hyperscalers or the big tech companies have is that we have them in our pocket, or we're integrated into them as an enterprise. That value doesn't change. The ability to use something more simply or more reliably, none of that has changed. What has changed is that the future costs of using these models are going down. So it's like every technology, deflationary.
I read somewhere that the biggest users of AI or the biggest investments from an AI application standpoint is either the telecom space or financial industries, number one and number two. So given what you're saying about the potential lower costs to come in the future, could that be a possible tailwind for these industries?
So the biggest user, and we quote Microsoft's data in our report, is the tech industry, so telecom and tech, and that's really social media companies, because AI is easy for them because it generates copy, pictures, words. The second biggest user in terms of cloud consumption data is the financial services industry. And that's really interesting because oftentimes in the last 5-10 years, people have seen finance as a laggard to using technology. But the financial services industry is throwing huge amounts of money, you know, whether it's been quant trading firms, of course DeepSeek comes out of a quant trading firm, or just big banks.
Yeah, I mean, you and I were having this conversation offline just now about, let's say you're a bank and you're outsourcing a lot of these decisions, agentic AI, to these machines. How much agency do you actually want to give them? Because then it becomes a question of responsibility. If something goes wrong, who takes the blame? Is it the machine? Is it the person who prompted the machine? Is it the bank for bringing in the software to begin with? It raises some philosophical questions, doesn't it?
So what you're going to outsource, whether you're a bank or a big company or a user yourself, think of my holiday example. Maybe we wanted to plan everything, but maybe we don't. Maybe we as a family want to decide. It'd be the same in a bank. There are certain things that we outsource today as an industry. We give it to offshore locations or we give it to third parties. If I'm giving it to a third party today, a human organization, why not give it to an organization, either internal or external, that's largely full of software agents? Some humans, but mainly software agents. So anything that's outsourceable, that's maybe less important, important in terms of cost, but not important to the decisions, that's the first thing we're going to give to agents.
The economist in me sees that as a massive productivity boost.
Totally.
That's the big
It's
discussion
going to be
taking place
a huge
right now.
productivity boost.
So interesting. Well, we have to repeat the conversation, longer formats. Ronit Ghose, thank you so much for coming on our show today. That was Ronit Ghose, Global Head of Future Finance at Citi Global Insights. And coming up, the World Bank unveils a plan to boost electricity access for 300 million people in sub-Saharan Africa. The details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. To Africa now, and World Bank President Ajay Banga says boosting access to electricity is the key to unlocking the demographic dividend in the world's youngest continent. The World Bank and other partners plan to spend around $85 billion to bring power to 300 million people by 2030 through the Mission 300 program. For more, let's bring in Bloomberg's Ndiro Oganga in Kigali for us. So, Ndiro, talk to us about this deal and what more we heard from the World Bank president.
Hi, Jen. So what we know is several players will be pulling into this kit, including the Africa Development Bank, including IMF, and also some private sources. And the goal here is that in exchange for this funding, governments will be able to change the legislation and create a more favorable environment for external investment to be able to flow into these countries and develop the kind of infrastructure that is needed. And just to contextualize the magnitude of this problem, the World Bank estimates that 570 million people across sub-Saharan Africa do not have access to electricity. And if we just map that in terms of countries, we have Burundi, Chad, Malawi, South Sudan, where access to electricity is less than 20%. If you look at regions, West Africa, 42%, but rural areas is 8%. And the irony of this, or the contradiction, is that these are countries that have so much potential when it comes to solar, when it comes to wind or hydropower generation, but they're glaring gaps in infrastructure and finance. And we're now hearing the World Bank saying that at least $115 billion will be needed to go into development and increasing access to electricity with solutions such as mini-grid and solar home systems.
Yeah, and Ndiro, of that 570, of course, a majority of the people who do not have electricity in the world are concentrated here in sub-Saharan Africa. How significant do you see this project being then?
It's going to be very significant because, Jen, if you look at access to energy, if you don't have it, it impedes a couple of things. It impedes economic growth, it impedes employment, and it also limits investment. The Africa Development Bank estimates that Africa loses up to 2 to 4% of GDP growth annually due to lack of access to energy. McKinsey's further puts it into context in countries like Ghana and Tanzania, where companies lose up to 15% of sale value because of in access to energy. And these businesses are now opting for alternative solutions like diesel and petrol, which tend to be 40% more expensive. But if we just personalize it for a bit, people are losing out on education, missing out on healthcare, missing out on jobs. And this is a demographic, like you mentioned in the beginning, where 70% of its people are under 30 years old. And in 10 to 20 years, you have an educated labor force that is devoid of hope and opportunities, and it opens the door to immigration. For a region that is on the cusp of economic development, brain drain is quite a costly price to pay. Hence, this investment is really going to be impactful.
Certainly. Thanks so much, Bloomberg's Ndiro Oganga in Kigali for us with the story. Thanks so much, Ndiro. Now, coming up, ASML reports results shortly. Investors will be focusing on the chip equipment maker's comments on AI demand. A preview of that next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Well, ASML is set to report results today with fourth quarter orders and the Chinese market's contribution to sales, the key metrics to watch. The chip equipment maker is not expected to post major surprises, with several analysts expecting the 2025 net sales forecast to remain unchanged. Joining us now is Bloomberg Daybreak Europe anchor Tom McKenzie. Tom, their lithography machines are obviously a key component with the existing AI infrastructure. What are investors watching out for in terms of the outlook for this year?
Yeah, and I think, look, there's added interest in these earnings given what we've seen over the last few days coming through from DeepSeek and the big questions about that demand around AI. For ASML, we're going to be looking at their fourth quarter order book. It's full year numbers we're getting as well as the fourth quarter. But in terms of the order book, expectations that maybe they get about $3.5 billion US. That is the analyst estimate. Margins should be around 50%. JP Morgan says do not expect another change to the guidance for 2025. We saw that shock announcement back in October where the stock dropped about the lowest level since 1998 for ASML. That was on cuts for demand coming through from Intel and Samsung. JP Morgan says that picture is unlikely to unfold again in the earnings story today. It would take another major set of cuts from their key customers, including Intel and Samsung, for that to happen. JP Morgan says very unlikely. What we're also expecting to see as well is scrutiny of the sales into the Chinese market. No, they cannot sell those high-end EUVs into the Chinese market, but lower-end DUVs and below, they can. So some of their kit is still getting into the Chinese market. In fact, in 2023, about 26% of their revenues came from that market. And Chinese customers have been pulling forward demand as well. So we've been scrutinising that. And, of course, any comments the executives have around DeepSeek and the impact.
So this is what I was going to ask, right? So the stock was trading close to 1,000 back in the summer of last year, now trading closer to around 640 on some of the issues that you cite. But of course, there have been chip restrictions, chip technology restrictions in place. They haven't been exporting some of their technology to China over some of these geopolitical concerns. How does DeepSeek upend the hypothesis that China won't be able to catch up, given that they haven't actually had access to some of this high-tech equipment and have still been able to produce a good model?
Yeah, I mean, there's two sides to this. One, and it's a really good question, one is they could face additional scrutiny. All of the supply chain that has aided China to build out models of this sophistication, even on lower sophistication chips. So possibly into the future, you could see a Trump administration putting further restrictions on the sales into the Chinese market. That could impact ASML. Bloomberg Intelligence says there's another case to look at, which is DeepSeek, because of the cost and the price cuts that have come through as a result of DeepSeek. The reduced cost could mean greater adoption, wider adoption of AI, and longer term, that could actually mean greater need for chips and higher demand for ASML. You cannot make these chips without ASML's kit.
Yeah. Well, I guess it's a question, a time-old question of volume versus margin, Tom. I mean, they could get a lot of volume, but at what price is going to be the question for them.
Yeah, absolutely. And look, you know, margins are expected for the full year to be above 50%, for the fourth quarter about 50% in terms of current margins. But whether that gets squeezed into the future is a valid question.
Yeah. Tom, always good to have you on. Let's see what ASML brings this time around. There's going to be a lot more scrutiny on these earnings, given everything that's happened with the AI space this week. Tom McKenzie, Bloomberg's Daybreak Europe anchor, thank you very much. Well, it's not just about DeepSeek. We also have the Fed meeting coming up today. Markets are not expecting a cut, but they are pricing at about 30% probability of a rate cut at the March meeting. Will the Fed Chair Jerome Powell move the needle? Will he sound a bit more cautious? Will the outlook be a bit more dovish, given all of the commentary that's come through on tariffs and trade, the impact that could have on the global economy? Markets certainly anticipating the Fed Chair Jerome Powell to sound slightly more cautious with the language. So this is where yields are trading. 2-year at around 4.19. We have the 10-year at 4.52%, about 1 basis point lower on the session. But that was it for our show, Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai, alongside Jennifer Sabazaja in Johannesburg. Stay with us for Daybreak Europe. This is Bloomberg.